I have a heck of a lot of charts to go through right now. You have no idea. So let's just move through really quick. I'm going to give you a lot of details. Stay with me, all right? Net foreign purchases of US equities. This is, you could see right now, 2020 and beyond, there's been so much money flooding into US equities like we've never seen before. This is showing you the foreign flows in and out of US stocks. Clearly, this is on the way up. We'll see what happens over the next little while, but it had been, in general, declining over the last several years. But as the market has been pumped up, this has been one definite trend. This right here just showing you to give you some insight as to what's happening with commodities, and you could look at it broken down in different ways and so on. Up here, local currency, total returns, and return to vol ratios over the past week. Right at the top of the list, you got copper, you got WTI oil, and it goes on. And then at the bottom here, you could see local currency returns and return to vol ratios. GSCI energy is at the top. We know that there's been a lot of money moving in just recently, and I've documented that just past few videos, in fact. So there's a lot more detail in those videos. A lot of these charts that you're going to see here are from the fund manager survey out of Bank of America. So this just gives you insight as to what billions and billions of dollars worth of money, what's happening with that. I really like it because it gets you somewhat into the mind of the institutional investor and what they're doing. All-time high in investors taking higher than normal risk. Look at it. Just look at it. I mean, the chart goes back basically 2001 up until the present, but I think it's pretty clear that we have never seen anything like this before. They always try to put, a little caveat. Well, we've never seen it before, but this time is different. Look, this is the fact. Inflation expectations, net percentage of fund manager survey investors expecting higher inflation right now. I mean, it's hard to tell on the chart, but it looks like going back from the 90s up until today, we've never seen anything like this. And why? Because the fake inflation rate that they show us has never been lower. So if it's never been lower, where is the only direction it can go? Fund manager cash levels down to 3.8 in February. It continues to decline. It might be hard to see on your screen right there, but the bars in the background, the light color, is what we're looking at specifically. That's the fund manager survey average cash balance continues to decline, and not coincidentally, the S&P 500 increasing at the same time. More money is moving out of cash and it's moving into particularly US equities. Emerging markets have definitely not performed as well. In general, have not performed as well as US equities. We've been seeing a lot of that, that's for sure. And they keep saying, well, there's too much cash on the sidelines. I don't know what they're talking about. Certainly a lot of propaganda, that's for sure. Fund manager global equity plus commodity allocation is the highest in 10 years. This is the percentage that say they're overweight equities and commodities. Now, commodities, I believe, is a very small percentage of that. But regardless, this is what they're showing us over this period of time. Only 13% of investors think we're in a bubble. In your opinion, the US equity market is in, and the top one there, that's a late stage bull market. So the vast majority of the investors do believe that it is towards the end of a bull market, but it's not a bubble. And below that, we could see an early stage bull market. So the second one believes that, that's hard to tell, but let's say about 27% of that believe that, it's just ridiculous. Anyway, 27% of it believe it's an early stage bull market. And then we have 13% saying it's a bubble. Nobody believes it's a bubble, and only one reason, because of the Fed. By the way, I wanted to interject the fact that just the fact that it is a bubble doesn't mean it crashes, doesn't mean it collapses. It means that it's overvalued. And when you have that, eventually at some point, people have to change their underpants. That's what I'm trying to get at. Long tech is once again the most crowded trade. What do you think is currently the most crowded trade? Right at the top of the list, the dark blue would be February, and the lighter blue there is January. And long tech is on top of the list. Last month it was Bitcoin, and apparently that's not exactly the case today. And short the US dollar has dropped as well. Fund manager survey shows cyclical consensus is cyclical. And they're just giving you an idea right here at the top of the list: commodities, industrials, materials, and so on. Fund manager investors add tech, healthcare, and US in February. And you could see right at the top of the list, just to show you month-to-month change in the fund manager survey investor positioning. We've got tech under that, healthcare, staples, equities, and commodities. So no matter what's happening with commodities, tech stocks are seeing this huge surge. And it's coming in different names, of course, but these trillion-dollar companies are getting to see some major inflows.